Hello, and welcome to My Finance Teacher. Saturday is here, and I hope you guys are having a nice weekend, and your weekend will continue to be very nice. And what we're going to do at the moment is we're going to have a look at the US dollar, the gold chart, as well as GDX. So over the last couple of days, US dollar has broken below its Bollinger Bands. In addition, the 20-day moving average on the US dollar, the red line over here, has crossed below the 50-day moving average. So all of that might actually indicate that over the next several weeks a US dollar is going to slide down, and that will all happen within the process of going through the declining phase in the intermediate cycle of the US dollar. Of course, on the opposite side of the cycle, when the cycle was in the advancing phase, whenever the chart broke above the Bollinger Bands, that was an indication of a coming rally in the US dollar. For example, over here, whenever we broke above the Bollinger Bands, a US dollar moved up from around say 91.5 all the way to close to 97. So that was a pretty nice rally after finally we saw a break above the Bollinger Bands. Now what we're seeing is just the opposite. The US dollar is breaking below the Bollinger Bands, the 20-day moving average is breaking below the 50-day moving average, and according to the duration of these cycles, the US dollar is due to enter a declining phase of its cycle. One thing you might have to remember, or one thing you might want to comment about, is the Fed rate hike that is coming up on the 26th of September. However, the market actually expects a Fed rate hike with nearly around 98 or 99% chance, so there is a high chance that most of the effect of the Fed rate hike has already been priced in, even if the US dollar moves slightly up in expectation of that Fed rate hike. I don't think we're going to see any significant moves up in the US dollar. Now, how low is it going to go? I want to have a look at a couple of indicators. Firstly, based on a couple of small local highs in February-March this year, I see a support zone somewhere around here. That's just under 91 on the US dollar. Besides that, we of course want to have a look at Fibonacci retracement numbers. Very often either 61.8 or 78 or 50% retracement is something common. So I would say over the next several weeks, a couple of months, a decline to anywhere between 90 and 91.6 is most likely, I think. Remember, nobody knows the future, and we are trying to forecast the most probable scenario going into the future. Now let's compare our expectation on the US dollar to our expectations on gold. Firstly, this high we saw in the US dollar actually happened in the middle of August, and of course there is a negative correlation between gold, well, denominated in the US dollar, and the US dollar index itself. In the middle of August we saw some sort of a local low on the gold chart, and that might prove to be, with a high likelihood I think, the bottom of this intermediate cycle in gold that has been stretched quite a lot for more than 8 months. So what do we see on the gold chart? Well, the 20-day moving average, the red line, hasn't crossed above the 50-day moving average yet, but it's coming closer to the 50-day moving average, and the 20-day moving average is still sort of sloping upwards, so we might see a positive crossover over the next, well, a couple of weeks. Another thing we see, or we don't really see that, gold is trying to break above the Bollinger Bands, but it cannot close above the Bollinger Bands yet. However, gold does seem to be in this sort of upward trend since the middle of August, and that is somewhat reassuring, although in order to see any significant improvement in gold price, I think we should see gold break above 1220. As we see, that area has been support resistance for quite a while, and a convincing break above that would finally, I think, bring some better, stronger upwards momentum in gold price. Looking at Fibonacci retracement numbers, even if gold is still in bear market, and even if we are going to see gold below 1000 over the next couple of years, and even if gold doesn't break above the highs at around 1370, even if, let's say, 62% of this decline is going to be recovered over the next couple of months, that still gives us a gold price just under 1300. Actually, 1310 has often been support resistance zone, so I guess we might see a move at least to 1310 over the next couple of months. So this sort of let's say modest move up to 1310 is still going to give us some sort of a profit, although I started publishing videos expecting this intermediate cycle low a little bit too early, and actually this intermediate cycle turned out to be stretched unusually long. So as far as I remember, you might want to check some of my previous videos. I already started expecting an intermediate cycle low somewhere around the price level of 1240 or so. So personally, I'm still a little bit underwater in GDX, but even just a move to low 1300s will fix that. However, a word of caution here, over the next week as we move into the FOMC meeting, we should exercise a little bit of caution. You never know what happens with Fed announcements influence the markets. And lastly, looking at GDX, what do we see on GDX chart? Well, we have already mentioned in a couple of previous videos, we see a positive divergence on GDX. RSI has not given us a lower low, although the chart itself has, so that is a positive divergence. We also see that since sort of early part of September, GDX has already moved up by around 8% or so, and just with just similar to gold price itself, if GDX breaks above this resistance zone that's sort of formed by this local high at about 19.3, as well as this gap, there's a gap over here at about 19.6, 19.7. So if GDX manages to break above that over the next couple of weeks, that I think would bring more capital into the miners, and hopefully miners might at least retrace back to the tight range that they were for quite a few months between 21 and 24, or maybe move higher than that. But again, we don't want to have our expectations too high yet. Let's have that Fed rate hike out of the way first. Me personally, as I wrote in some of my comments in some of my previous videos, I've added some more to GDX, and my average position actually dropped from just under 22 to just about 20.4, something like that. So I am still underwater, but I think that will be fixed over the next couple of months. What do you guys think? On one hand, GDX and gold, they were pretty oversold relatively recently in the mid of August. On the other hand, going further a couple of months into the future, that already brings some tax loss selling pressures that might pressure a lot of the assets down. So how do you guys think? Are we going to see gold above, say, 1300 by mid of December, or what's going to happen? Let's have some of your comments, and thanks for your attention. Have a nice weekend.